at him, Tobin Atlas, the man, the myth, the guy who hasn't ordered guacamole at Chipotle since 2009. He just did the thing. He made his final mortgage payment. He is 52 years old. He owns a $675,000 house, free and clear. Zero debt. The American dream, baby! His friends are jealous. His mom is crying. The Dave Ramseys of the world are smiling down from the clouds. Tobin thinks he's won the game of life. Fast forward exactly 3 weeks. Tobin is on the phone with the bank, begging for money. Why? Because his central air conditioning unit decided to commit ritual suicide in the middle of a heat wave. The quote? $11,000. Here is the problem. Tobin has $4 grand in checking and $18 grand in savings. To fix the AC without bankrupting his emergency fund, he has to do the one thing he swore he'd never do again. He has to borrow money. He owns a nearly $700,000 asset, but he is functionally broke. His net worth looks great on a spreadsheet, but you can't pay an HVAC guy with home equity unless you plan on giving him a brick from your chimney. Tobin traded his liquidity, his cash, for equity. And folks, equity doesn't keep the lights on. I'm Biscuits, and I'm here to tell you why rushing to pay off your mortgage is the financial equivalent of sewing your pockets shut while your wallet is still inside. We call this the equity trap. It's why people who do everything right end up collapsing the moment life throws a slightly expensive curveball. If you've been eating rice and beans to kill your mortgage, or if you think a paid-off house is the holy grail, smash that subscribe button. I'm about to hurt your feelings with math, but I promise it's for your own good. Here is the lie they sold you. A paid-off house equals freedom. You think because nobody can foreclose on you, you're safe. You think your monthly nut drops to zero and you ride off into the sunset. It's half true. Your mortgage payment is gone. But your wealth? It's trapped. It is locked inside the drywall, the roof shingles, and the slab foundation. You cannot spend your kitchen island. Tobin has $675,000 sitting in that house. It does nothing. It sits there. Maybe it goes up in value. Maybe it doesn't. But when the car explodes, or the appendix bursts, or the job market tanks, that equity is useless. You have to sell the house or borrow against it to get the money back out. You've heard the stats. The Fed says 37% of people can't cover a $400 emergency. But what they don't tell you is how many of those people are house rich and cash poor. Tobin is in the top 20% of net worth for his age. He looks rich, but he can't buy an air conditioner without begging a bank manager named Steve for a loan. The system told Tobin the finish line was zero mortgage. The system lied. The finish line is options, and Tobin has none. Let's look at the crime scene. The math. Tobin's original mortgage was $320,000 at a cozy 4.2% interest. His payment was about $1,500. For the last 5 years, Tobin went beast mode. He paid an extra $1,000 a month toward the principal. That is $60,000 of cold, hard cash he threw at the bank to kill the loan early. If Tobin had just chilled out, paid the minimum, and put that $60,000 into a boring, vanilla S&P 500 index fund getting a historic average of 10%, guess what? He'd have roughly $78,000 sitting in a brokerage account right now. Smart Tobin writes a check. No debt, no stress. Real Tobin has $60,000 buried in his floorboards. He saved about $13,000 in mortgage interest, sure, but he gave up $18,000 in investment growth to do it. He literally paid money to be less flexible. It gets worse. Stick with me. Tobin paid off a 4.2% mortgage. Now, to fix the AC, he opens a home equity line of credit. The current rate on a HELOC? Around 7.2%. He paid off cheap debt just so he could borrow expensive debt to fix the house he just paid off. That is not financial freedom, folks. That is a hamster wheel designed by Satan. The liquidity crisis isn't just about disasters. It's about the wins you miss. Tobin works in marketing. His old buddy James offers him a partnership in a new firm. Solid business, a literal money printer. The buy-in? $35,000 for a 20% stake. Tobin's net worth is almost $700,000. He should be able to write that check, but he can't. He has $18,000 in savings. He can't drain his emergency fund for a business deal. That's suicide. If he had that extra cash he dumped into the mortgage, he buys in. He changes his career trajectory. Instead, he watches James get rich. Why? Because Tobin's wealth is trapped in drywall. And don't tell me, just get a HELOC for the business. Banks hate that. They lend money for new kitchens, not new businesses. If the business fails, you lose the house. The bank knows this. Tobin has equity, but he has no capital. They are not the same thing. I can hear you screaming at the screen. Biscuits, you're telling me to stay in debt forever. You're a shill for the banks. Calm down. Put the pitchfork away. I'm not saying debt is a party. I'm saying debt is a tool. Eliminating debt while destroying your liquidity is not responsible. It's fragile. The goal isn't zero debt. The goal is zero stress. Think about it. If you have a mortgage at 4% and you can make 8% or 10% in the market, keeping the mortgage makes you richer. The National Bureau of Economic Research backed this up. Households with mortgages and cash survived crashes way better than households with no mortgage and no cash. So, if you are Tobin, or you're on the highway to becoming Tobin, pull over. Here is the new game plan. First, stop making extra payments on the house immediately. Do not pass go. Take that cash and build a liquidity shield. 6 months of expenses. This money is not an investment. It is insurance against stupidity. Second, look at your mortgage rate. Is it under 5%? If yes, congratulations, you won the lottery. Never pay that off early. Put your extra money in the market. The compound interest will beat the mortgage interest and you keep control of the cash. If your rate is over 6 or 7%, okay, pay it down, but only after you have that cash shield. Third, if you're already paid off and house rich/cash poor, go get a HELOC today. Right now, while you have a job and good credit. Don't wait until the roof collapses. Set up the line of credit and don't use it. It costs nothing to have it sit there. It's a parachute. You don't want to go shopping for a parachute after you've already fallen out of the plane. Fourth, if you are really stuck, huge equity, zero cash, look at a cash-out refinance. Yes, getting a mortgage again feels like going backward, but borrowing $200,000 at 6% to invest at 8% or 9% makes you mathematically richer and keeps you liquid. The enemy isn't the bank. The enemy is having zero options. We all thought Tobin won because he cut the bank out of his life. It feels good. It feels disciplined. But in reality, Tobin spent 15 years transferring every ounce of freedom he had into a box he lives in. The house owns him. It owns his risk tolerance. It owns his schedule. You can keep believing that a paid-off house is the ultimate flex. Or you can realize that true wealth is the ability to write a check when the world catches on fire. Sadly, Tobin didn't have options. He had equity he couldn't touch and bills he couldn't pay. That's just being broke with a better view. I've crunched these numbers until my brain smells like burnt toast so you don't have to. If this video saved you from the drywall dungeon, smash the like button. Also, check out the ebooks and check out our many financial calculators and other resources. Links below. Seriously, go look at them. I need to buy Tobin a helmet. See you in the next one. Learn from Tobin's actions.